It is the trigger for a global margin call. Think of the global financial system as a giant leverage trade. For years, hedge funds and banks have borrowed money in yen because it was free, and used that money to buy Nvidia, to buy Bitcoin, to buy real estate. This is the famous carry trade. But now, the yen is getting expensive. The cost of borrowing has skyrocketed. So what do the traders have to do? They have to pay back the loan, and to pay back the loan, they have to sell the asset. They have to sell the Nvidia. They have to sell the Bitcoin. They have to sell the real estate. The spike in Japanese yields is the pin that pops the everything bubble. We are already seeing the tremors. The volatility in the US stock market this week is not random. It is the early stages of this unwind. We are looking at a sovereign debt crisis in the world's third largest economy. Japan has a debt to GDP ratio of roughly 260%. That is the highest in the developed world. When you have that much debt, you cannot afford higher interest rates. Every 1% rise in rates consumes a massive chunk of the national budget. At 4%, the interest payments alone could consume the entire tax revenue of the Japanese government. This means the Japanese government is facing a fiscal crisis where servicing their debt could potentially outpace their tax revenue.